Hello, traders. Gary Wagner with the Gold Forecast. It is Friday, October the 8th, and this is the Daily Report, our weekend review. Gold has had a substantial upside rally after our one-day sell-off yesterday. We had a $45 swing in the marketplace yesterday, creating a high and a contract high as well as a record high at 1365. The market did continue to plummet, at one point down about $25 on the day to close about $14 to $15 lower. That was yesterday. Today, everything is a little bit different. As you can see, this is today's candle. It's currently trading at 1343.70. It is up between $9 and $10. And as we talked about yesterday, I believed that traders were waiting to hear news of the U.S. jobs report, the non-farm payroll report, to have some fundamental information to give us an idea of where this market would head. Well, the payroll number came out, and it was worse than expected. We lost in the United States about 65,000 more jobs. And that kept our unemployment rate at about 9.6%. However, I think that's really a misnomer, because according to a couple of sources, you take that 9.6% and realize that does not account for those who have been unemployed and are no longer looking for jobs. In other words, those not on unemployment benefits of sorts. And the estimate is around 16% USA unemployment. And of course, unemployment is going to be a driving factor in any economic turnaround. Without it, there is no possible way for the economy to turn around, because the mindset is that if you're scared about losing your job, you're certainly not going to open your pocketbooks, you're certainly not going to spend freely, and you're certainly not going to see a robust economy. Traders, yesterday we talked about the fact that in terms of a straightforward pattern on these two candles, this black and this red, we saw what was called an engulfing bearish. An engulfing bearish, of course, is a two-day pattern in which the black candle completely engulfs. It's also on Western trading technology called an outside trading day. And I said that without what we call confirmation meaning on the following day you get a black candle with a lower low, lower high, and lower close, you don't take that signal. It's it. And I was trying to figure out if what we were looking at was simply some profit taking or the beginning of a full-blown retracement. Now, interestingly enough, if you actually take a look at how this candle formed, of course, it always has to, this is your open here, and then your close on the black candle, and then, of course, your open is going to be in the same way. Now, at one point during the trading day, and this was last night as I was watching it, it actually was a black candle because you had this close here, and as it was currently down about $10, it actually was black. And I realized that as it traded, it's really going to depend on what kind of critical data comes out of the job report, and if it is as expected or not as bad as expected, we might in fact see some carry through and we might see a retracement. That was not to be. And so that as that report came out and the market came back strongly, as you can see, it's had a high of about 1350 on the day. And in terms of the sell-off itself, it did give back on a closing basis about 23% of the gain, and I'm talking about the gain of this wave 3, which is from here to here. So we did see a significant sell-off. In fact, when you look at this market move from the bottom here at 1150 $200 ago, you see that that's been the single largest one-day move that we have witnessed in this Super Bull cycle. What that tells me is this market is increasing volatility. There's no doubt. We expect that. This recovery, I happen to think, is extremely strong because what I had talked about is a market that is in a Super Bull cycle. And if we are to continue in that cycle, we've certainly been in that cycle when you consider this recent move in the market. But if we are to continue in a Super Bull cycle, that is going to be predominantly marked by very shallow retracements and very strong and extended rallies. Traders, I think we're seeing that today. Traders, this is our hourly chart of gold, and we kind of look at it to get an idea or a sense for how it trades. I call them bands. They are actually very narrowly defined trading ranges, such as in this area, where the market will tend to trade in a nondescript way, meaning trading with a very close low and high. They tend to be pretty close together, and then what you tend to get is these breakouts to the upside or downside. Of course, in gold, it has been predominantly, almost religiously to the upside. Then we see this again. We get this market move, and here we had a small breakout to the downside, and then it kind of consolidates. It tends to meander around a little bit. In other words, it does move up a little bit here. It then trades sideways for a bit. But then, as you can see, this is that huge spike to our contract high. That's what I'm pointing out. This is that huge spike to 1365. We had it sitting in this area for only 1, 2, 3, 4, 5, about 6 hours. 6 hours on this top here. And then, of course, that single largest one-day drop, that all of that activity takes place right within this band here of candles. It then traded again sideways, as we can see, and lo and behold, we got another breakout, and that breakout genuinely is to the upside, although it has come off of those highs. That's at 1350, and as we go into the close, we do have a couple hours of trading left. You notice that at the same time, it has kind of stabilized right within this area. Now, what does that tell me? Well, one, we certainly have some increased volatility. The kind of spike that we saw right in here to the upside, you can see how long that took. You can see how many hours it took. It actually kind of channeled up. Here's this 1315. It starts to move up. As it moves up through the week, it finds this narrow band here. That's a significant move for the week, and then forms this base right in here, right around 1340 to 1350. In other words, you had excuse me, support right around 1345, 1340 in that area. You had resistance just at about 1350. And then you got this large spike up, which is where we got our contract high right in here. And it held there for a significant period of time between 1360 and call it 58 before the profit taking set in. This was probably in anticipation of the jobs report. There were some longs out there that were not comfortable being long going into the report. However, once the report came out and it was noted that it was actually a little bit worse than expected, the loss of another 65,000 non-payroll jobs, that market recuperated and moved back up, as I say, currently trading at around 1345. So traders, what am I looking at? Well, we do have that long position right in this area, 1340. We have a stop at 1290. I'm recommending that we maintain that stop. We maintain that long position. It might have been wise in hindsight, of course, to buy the dip. However, with the job reports coming out, I was not comfortable. I was really looking to see where the market wanted to go and to feel confident about this position, let alone add more risk to it. I will tell you in terms of next week, we've had a most interesting week. There's no doubt about it. Each week in this market continues not only to excite me, but to really, really heighten my senses. Because we get these all-time historical record tops almost on a weekly basis at this point. It has hit my primary number, though. My primary number, if you recall, the number I was looking for gold to trade to was 1340. We are at 1340. We also had not a correction, but a round of profit taking at 1340. My next target is 1400. My question is, will we see 1400 first or a retracement prior to that? My answer, I don't know. I can tell you this. The recovery that we saw today was extremely strong. We're going into a weekend, and I do want to stress this. All of the fundamental bias that I have, the extremely bullish fundamental bias that I have, all of that is still contained within the market. Quantitative easing, the scenario that we see over in Europe, the European Union, and its debt structure, the overall economic or global economic outlook right now is not incredibly strong. Now, there are sectors that are improving. We have some strong reports in our stock market because we have some strong companies working right now. And the key right now, as I'm concerned, and I think the market is also, and the reason we've seen this market now move up approximately $10 off of those lows, is the job report. Without people going back to work in the United States, the outlook for an economic burst, a rekindling, so to speak, is not in the but in the future stars short term. Long term they are. The other thing we want to take some serious credence to is that markets don't go straight up or straight down. We don't believe that gold will trade higher forever. It's going to have periods of strength, of course, and periods of weakness, periods of strength and periods of weakness, as we see here in a more typical market as we went through our waves. However, what we've witnessed over this last set of this brand new cycle, because realize that a Elliott wave cycle is contained of 8 waves. So you start with here, wave 1, and that will take you all the way to C. That's one complete cycle right in here. Now we've started it anew and afresh. And so this this 1, 2, and 3, this wave right in here, this set of waves is unlike any waves I have ever seen before. No one's seen activity like this. If you look at the sheer magnitude, the tact, the angle, that it's been moving up, it's absolutely extreme. If you consider where it's gone and the length of time that it's gone, it's been extreme. If you consider the fact that we have relatively small, almost non-existent rounds of profit taking, it's been extreme. Traders, this has been just an incredible journey that we've been on. I'm so glad that we've been together to do this. Let's see what tomorrow brings. Let's see what next week brings. This is Gary Wagner wishing you, as always, good trading, and we'll talk to you on Sunday for the Daily Report. Bye-bye.